Okay. So James, this is what we call our value pricing tool, and you can see that you brought up your own sample company just as a test, and we put in the date of December 31st, 2019 to December 31st of 2020, and this is from a sample QuickBooks database. And the whole purpose of our value pricing tool is really to allow bookkeepers to understand the volume of transactions that a prospective client has, so that when you do your value pricing, you're not going to underprice the amount of work involved. So, you know, we can see right here that we have an accounts payable screen or graph, and we can see that we have 52 would be the number of vendor invoices over a 1-year period, and that there were a total of 16 line items that had to do with inventory put in there, as well as 50 expense line items. So in those 52 vendor invoices, it looks to me like 50 might have been related to expenses and 2 might have been related to some sort of inventory, where there might have been maybe eight items on each invoice on average. But now we know that, hey, you know, this client, they only have 52 vendor invoices. That's not that much. They don't have like, for example, 500 expenses, because that means there'd be 10 expense line items per vendor invoice, right? Because now you're talking 10 vendor invoices divided, 52 vendor invoices divided into 500 gives you 10.
I see. So why is it important that we have less number of items per invoice? What's the value of that?
Well, it's just less work, right? I mean, you simply will do less coding with 10 rows per invoice than if you had one. And if you only had one expense or item per vendor invoice, then you can code things a lot faster than if you have 10 or 15 line items in the vendor invoice you have to code. That's why it's important to know.
I see.